This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
So hello, this is Llanes with the Market Call of the Week. It is August 22nd, 2018. On Tuesday, on the 21st, stocks really shrugged off news that Michael Cohen, President Trump's personal lawyer, pleaded guilty on 8 criminal charges. That was a bullish sign. And the Federal Reserve is expected to raise rates again if the economy stays on track. According to the Fed minutes, you could really read that into the report. Now, those Fed minutes came out on August 22nd. Higher fuel prices led American Airlines to change their plans for flight patterns. Now, that's a reminder that inflation could affect businesses if we see inflation accelerating, so that's something we're keeping a lookout on. The S&P 500 rose, stopping just short of ending its longest stretch without a closing record in 2 years. We really saw the S&P drawing closer to January record. The S&P peaked above the highs just briefly and tested resistance and sold off slightly. Technicians could take a look at this base pattern and forecast out an upside target of 3,212 on the S&P. From a technical perspective, an upside target of 11.83% from the current levels is possible. That would put the S&P at 3,212. We achieve that only if we have a breakout that's successful and the markets stay positive. That upside target is calculated by taking 2872 minus 2532 and adding that to the top of the January high of 2872. That's about a 340-point upside potential, or 11.83%. Now let's take a look at the momentum of the market. So as we look at this momentum chart, we see that momentum is positive. Prices are significantly above the volume-weighted average price from the low and the high of the range. The current volume-weighted average price is between 27.48 and 27.28. That range is well below the current level of the market at 28.61. So most investors have positive gains most likely from this range. Now let's move on to the breadth. We're going to look at 2 different breadth indicators here. The first is the McClellan Oscillator. This measures the number of issues that are advances versus those that are declining. And what we see is that we are currently above the 39-point trigger range, which is a bullish reading. The reading is currently at 50.40. That's a bullish sign. Now let's move on to look at the percentage of stocks that are above their 63-day moving average. Right now we have a reading of 70.89%. That's on the upper end of the range, as most stocks are in an uptrend in the S&P 500. Now, if we move on to another chart and take a look at the sentiment, we see that the small caps are beginning to accelerate up faster than the S&P 500, which are large caps. This indicates that people are feeling confident in the market. We also see that confidence with the volatility figures. We're looking at the average percent range, and we see that the volatility is declining since the peak in January. We also see that emerging markets compared to the developed markets are really above the center line in the downtrend of the regression line. So what we're looking at with the emerging markets versus the developed markets is a relative performance. When the line is declining, emerging markets are underperforming developed markets. Right now what we're seeing is that we are still in the downtrend with emerging markets underperforming developed markets. However, that line is now above the center line of the downtrend. So we see that there's a slowing down a little bit of the underperformance of emerging markets. Now let's take a look at the proprietary index we put together of the stock markets that export a lot of products to the United States. When we look at this chart, we see that tariff concerns are still continuing. I'm sure that's no surprise to most people. Major exporting countries to the U.S. continue to sell off since the election. If you look at the trend since the election, this is a relative strength chart, by the way, compared to the S&P 500. If you look at this chart, you see that after Donald Trump was elected, they actually outperformed the U.S., but recently it's really been underperforming a lot, and we've lost all the relative gains in the emerging markets and as well as those other markets that are sending a lot of exports to the United States. So that's a wrap of the Market Call of the Week this week. Please be sure to like us and to go to our website and to also check us out on Twitter. We'd be glad to send you more information, as well as to make sure that you stay abreast of the new developments that we're seeing in the marketplace. This is Llanes, founder of WealthNet Investments, signing off for now, and happy trading.
If you like this information, be sure to subscribe and follow us on Twitter and Facebook. The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals.